Good morning and welcome to Stock Market Today for Monday, April 15th, 2019. I am your host, Dan Russo, back in the saddle. Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for the free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So, happy tax day to those of you in Boston. Happy Patriots Day. It is April 15th, and we are going to dive right in. U.S. equities were higher in Friday's trading, led by the Dow Jones Industrial Average, which added more than 1%. Treasuries were weaker across the curve, sending the yield on the 10-year to 2.56%. Dollar was better on the yen cross, but weaker against the euro and the pound. Gold finished up about 10 basis points, and oil was higher, with WTI crude settling up 50 basis points. Now, your outperformers were financials on the back of the JP Morgan print, as well as some other reports out of the banks. Materials, industrials, and comm services. Comm services led higher by that pop in Disney. Healthcare, underperformer. Before I went away, that's something we were talking about a lot. Underperformance of healthcare, it does continue, and we're going to see the main culprit. We're going to look at pharma names in a little while. Energy underperforms, consumer staples as well as utilities, though healthcare was the only group to finish lower on the day on Friday. As we get to the desk this morning, S&P futures are little changed after finishing higher last week. S&P was up for a third straight week. Asian equities were mostly higher overnight, with Japan leading the pack up 1.5%. China did finish lower. European markets are stronger to begin the week. Treasuries are little changed. Dollar is slightly weaker on the major crosses. Gold is down 40 basis points, and WTI crude is down 1%. So here we have it, folks. Gap higher on strength in financials on Friday. You can see it here. Support is near 28.50. That's this local top right here, as well as the gap. So call 28.50 for a support, then in the 2800 to 28.15 range. Resistance, we're kind of in it. Round number resistance around 2900. 2940 is the September highs. RSI remains in bullish ranges, now overbought or close to overbought. Chaikin money flow is continuing to rebound. What I like about this rally from a trend perspective is that it's been confirmed by momentum. Now, I've drawn the uptrend line here on RSI. We've previously had the line here in the sand at 50. Pullbacks cannot become oversold. They can't even break the 50 level for RSI. That tells us there's underlying momentum here. Now we have the 200-day moving average beginning to turn higher. Chaikin money flow is positive. So the indicators are confirming what we're seeing in price. Now, as we get up here near the highs, is it reasonable to look for a slight stall out? Yes. If I look on a short-term basis at our short-term overbought, oversold indicator, is the SPY overbought? Yes. We want to use pullbacks to buy bullish and very bullish stocks in leading industry groups and leading sectors of the market when those stocks become oversold. I don't see a ton of compelling setups right now, just with the overbought nature of the market. The rally we've had might be an opportunity to take some profits in some of the names that have run, and then look for better entries on the long side. Market in a minute. What I'm talking about, what I'm writing about in the note to Chaikin Analytics clients today as I get back into the saddle. Stocks continue to advance towards the September highs as earnings begin. Financials lead on the day following positive results from JP Morgan. The 10-year yield rallies to resistance near 2.55. Call it 255.26. Upside resistance for 10-year yields. I think the path of least resistance is lower. We'll take a look at that. Pharma stocks are a group to avoid as they sit out the rally, and it's been the pharma stocks, the big pharma names that have been weighing on healthcare. Futures do point to a flat open today. Let's get into the power bars for the major indices, because in the 6 days that I've been gone, they have all improved. Chaikin power bar rating for the Dow, power bar ratio rather for the Dow, 6-2. Dow up 1% on Friday. S&P 500, 137 bulls, 46 bears. NASDAQ greater keeps getting improving. 28 bullish or very bullish stocks, 8 bearish or very bearish stocks. Small caps continue to improve as well. although they did underperform on the day. Remember, our bearishness on small caps is more of a relative stance. Bonds downticked, sent yields higher, financials big day on the back of earnings. We're going to get some more earnings out of the financials today. We're going to hear from Schwab. We're going to hear from Citi. We're going to hear from Goldman Sachs on the financials today. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes are mixed. Stock of the day today is Accenture, ticker symbol ACN. Business services stock, really an outsourcer consulting name, kind of gets lumped in with the software and services group. Closed at 178.64, up 16 basis points on Friday. Power gauge rating for Accenture is very bullish due to very strong price volume activity and positive expert activity. And when we roll up the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. So what do we have? A very bullish stock, strong trend, strong industry group, type of name we want to own. Market and model and agreement here is we've been on that bullish rating since February, and then in March, stock began to outperform. The intensity of that underperformance has been picking up of late, especially following this gap higher on earnings. Now, stock is currently overbought. Money flow is bullish, however, confirming the price strength. A couple ways to skin this cat. You break out traders above 75, you're long it. You can see it here. Break out through these to 52-week highs. You're long the stock. You're playing momentum. For those of you who don't like to trade the breakouts, like to wait for a little bit of a consolidation, want to wait for this overbought condition to alleviate itself, I think as long you want to buy pullbacks to 175 that produce an oversold reading or close to an oversold reading. And that, to me, is your optimal entry point if that is more your style. So a couple of ways to play this one. I think you do want exposure, though. I think you want exposure to the upside. If the overbought reading here scares you, you can buy call options. So you can participate in any further upside, but limit your risk should we start to move sideways or pull back to work off this overbought condition. So a few ways to play it. I'll walk through them as best I can for you, try to give them all to you. But regardless, I think you want bullish exposure to Accenture, ACN on the long side. Sector tracker now, looking at the movement in the major sectors over the last 5 days. Strong Friday. Gives a boost to the financials, sends them to the top of the list. Now, financials, when I look at the power bar ratios for the sector ETFs and Chaikin Analytics, financials are top of the list. They've displaced tech and utilities. Top of the list. What I'm waiting for now is a reversal in that relative strength in the financials. They've continued to underperform. If we can start to see a stabilization in that underperformance and see the group begin to move higher on a relative basis, I think there's going to be tremendous opportunity in financials. But remember, we have a process. And what I think could happen or what I want to happen doesn't mean we trade on it. We trade what is. They're not there yet. We're keeping an eye on them. They're not there yet. Communication services, Disney juices that group on Friday. Tech in the top 3, 20% of the S&P 500. We want to see that group outperform. Staples, discretionary, and materials. We've talked a lot about materials. That group continues to do well. Starting to get more excited about that area. Real estate, industrials, and utilities also positive. Energy down over the past 5 days. And healthcare, we've talked about it. It has been a relative mess, largely due to big pharma. We'll take a look at that in just a minute. Our industry in focus today, speaking of the financials, speaking of earnings, bank services, 54 bullish or very bullish stocks, 4 bearish or very bearish stocks. This is what we're talking about. This is where the combination comes in of fundamentals and technicals. This ratio tells you that the fundamentals for the banks are strong, but the technicals are not there yet. Over the past 6 months, they've underperformed the S&P 500 by 2.3%. So we do have that bullish power bar ratio. It's very strong. 54 to 4 gets it a rank of number 2 of 21 subsectors. It's moved up 2 slots over the past week. So as a group, we want to see that outperformance, and we want to start doing work on names. IBKC, RDN, and Key, all very bullish stocks. Take a look at RDN here. Look at this breakout through 21. Breakout traders, it's a little extended. It's overbought, but market and model are in agreement. Dynamic duo in gear. Type of name we want to consider owning within the financials complex. Very bullish stock, strong trend, strong industry group. We're just overbought here. Money flow is bullish, above the rising long-term trend line. Use sideways action or pullbacks to 21 that produce an oversold condition to buy RDN. Trending names now. Gainer side of the board, APC. That is Anadarko being bought by Chevron over here. 32% to the upside. Disney unveils pricing for their streaming service, Disney Plus. Investors like what they heard there, up 11.5%. PXD and Concho, CXO, mentioned by the sell side as other E&P companies that could potentially be in play by the majors, potential targets of the majors for M&A. Throw Devon in that list as well. Always going to get the juices flowing here for the group. And remember what we've been saying about energy, right? We've been noticing that the relative underperformance of energy, the momentum of that underperformance has been waning, and we've been calling energy now no longer a short. And now we're starting to see M&A. Stocks are starting to work. See the cycle in action. Nice when it all lines up that way. Loser side of the board, still some political commentary weighing on the healthcare services names, Anthem and UNH down on the day. NOV, National Oil Well Varco, their earnings sent that stock down by over 8% on the day. Chevron, as we said, buying Anadarko. Netflix down as Disney unveiled their pricing for the streaming service. So bank earnings sparked the financials, but here's that downtrend. Here's that relative strength. XLF relative to SPY, clear downtrend below the 200-day moving average. Notice that really the RSI of this ratio has not been able to become overbought since December of 2017. Over a year of not being able to become overbought. This is a downtrend. And it doesn't look like it's dissipating just yet. Here's those technicals and fundamentals. Strong power bar ratios for the financials, but the technicals just aren't there yet. Wait for the better setup. On an absolute basis, still nowhere near its highs. Getting better, improving, obviously something we're going to keep an eye on, but it's hard to get aggressive when this trend continues to be lower. 10-year yield nears resistance, and here's another, could be a potential another problem. Other problem for the financials is that if this resistance level at 2.6 holds, and yields begin to move lower, that's going to weigh on the financials as well, and that is our base case. We do see the path of least resistance for the 10-year yield as lower, and here's why. Momentum remains to the bear side of the coin here for the yield. Below the 50-day, below the 200-day moving average, both of which are downward sloping. It's hard for me to say that this is anything more than a counter-trend rally within the context of a downtrend for yields. Likely going to see yields go lower. Pharma fails to join the party, and this is what's been weighing on healthcare, right? If you look at healthcare, look at the devices look really good. It's pharma, especially the large cap pharma names. Think of names like Merck. Here's the XPH, the ETF that tracks the S&P pharmaceutical stocks, has a bearish Chaikin Power Gauge ETF rating. Been underperforming the market since November. So it works the same way, right? The analysis is the same here. Dynamic Duo is in gear to the downside. We have a bearish fund underperforming the market. Notice what happened here. Rally attempt could not even induce, couldn't get to an overbought reading as Chaikin money flow turns negative. Fund falls below the declining long-term trend line. To me, path of least resistance for this group of pharma stocks is down. Want to continue to avoid it. If you want to play in the healthcare space, you need to look to the devices, the equipment names. Names like Baxter International. Ticker BAX has a bullish rating, strong trend, strong industry group. Outperforming the market since December. Model turns bullish in January. Dynamic Duo in gear. Stock is deeply oversold while money flow is extremely bullish. We have a breakout here at the 77 level being pulled back, retesting there. I think as long as we're above 77, Baxter's okay to the long side. Notice it triggered an oversold buy signal today above the rising long-term trend line. It's my bullish stock of the day for Chaikin Analytics clients today. In my morning note, take a look at Baxter on the long side. That's going to wrap it up for today, folks. Sign up for the email. chaikinanalytics.com/today. I will see you back here tomorrow. Have a great Monday, everyone.